high net worth tax shelter in Jeopardy? Hey everyone, Adam Bergman here, tax attorney and founder of IRA Financial. On today's podcast, the private placement life insurance. Is it on the chopping blocks? So in this podcast, I'm going to talk about this life insurance type product, which has been used by a number of my clients, also a number of folks that I know, mostly high net worth folks that have used this strategy as a way of investing alternative assets like hedge funds, private equity, in a life insurance type model where with the right and correct estate planning techniques, you can actually shelter all this potential gains from taxation and even from estate tax if done properly in an irrevocable trust, and then have your heirs have that cash without tax. So it's really, really interesting strategy. It's not really marketed to the public for a number of reasons. Number one, you generally have to be an accredited investor to get into a PPLI. Why? Because most of the investments that this type of insurance vehicle, this private placement life insurance vehicle will do is private placements. And in order to invest in private placements, generally have to be an accredited investor. So an accredited investor is someone that has a net worth of at least $1 million, excluding primary residence. Also have at least $300,000 in annual income if you're married, filed jointly. So those are the basic requirements to be an accredited investor. If you're not an accredited investor, you're not going to be able to invest in a PPLI type policy. Now, a PPLI policy is a lot like just a variable universal life policy, providing death benefit protection. It also has a cash value component. You can also borrow against it. The main difference is the investments, right? If you just look at a regular universal life policy, you're going to be investing in various equities, and you're not going to be able to basically choose your own investments. The insurance company generally will make those investments for you. Some policies will give you some flexibility in choosing the investments and even the investment manager, but you're generally going to be limited to traditional investments. Here, you're going to be able to allocate amongst various alternative assets. Now, there's still some allocation requirements in terms of how much each type of investment could have, but this PPLI has been very attractive because if you're high net worth and you already have a lot of money in equities, this is a way that you can take some money, invest it in private placements, aggressive investments that could generate huge returns, shelter it from tax because it's in a life insurance policy, potentially even shelter it from your estate tax if you use an irrevocable trust to pull it out of your estate, and then leave all that money to your heirs. Now, during your lifetime, you also have the potential to borrow against it, okay, depending if the policy has enough cash value. And that will obviously impact what comes out at the end, but being able to borrow tax-free from it, the ability to have the money grow tax-free in a life insurance policy, and also the ability to leave it to your heirs. And on top of that, the ability to invest in alternative assets. So it's basically very akin to a Roth IRA. The only difference is a Roth IRA is not exempted from estate tax. And the other thing is you're limited in how much can be in a Roth IRA. These policies, you could pump in millions of dollars, right? You're going to fund at least $1 million at a time. And most people fund $3 to $5 to $10 million. So it's a way to take cash that is generating taxable income in your JP Morgan wealth account, moving it into this tax shelter, quote unquote. That's not me, that's Senator Wyden. We'll get to Senator Wyden in a few minutes in terms of what he thinks about this stuff. So you take the money out of your JP Morgan wealth account that's earning tax on dividends and interest and capital gains, dumping that money into a life insurance product, okay? Being able to borrow against it tax-free, having flexibility in the investments that you select, not just stocks, right? You can do private equity, hedge funds, venture capital, real estate funds, and then also shelter it from estate tax if you do it in an irrevocable trust. And on top of that, you'll have all that money go to your heirs. So it's money you're not going to need. It's money for your kids or your charity, grandchildren, whoever it is, someone in your family. Get it out of your estate and generate tax-free income in the life insurance, plus also be able to borrow against it. So it's a super, super, super interesting technique. But again, you have to be able to put millions of dollars in it. If you're funding it with 100 grand, it doesn't make sense because you can't buy anything. Okay. You also need to be accredited. And you're basically, the play is take a bunch of money I have in a taxable account, move it into one of these PPLI policies, borrow against it, but generally you're not going to need that money for you. You may need it, God forbid, an emergency, you have it, but it's really as a way to provide for your family, your heirs, your kids, grandchildren in a tax efficient manner, and also in a manner that evades estate tax. So super, super tax optimized. As a tax lawyer, it's a very interesting product. It's been around for, I don't know how long, probably, I've been hearing about this for, 10 years or so, 8 to 10 years. But there are some controversy. There are some critiques. And the biggest critique is our friend Senator Wyden, who's always seems to be at the chief position of trying to combat any type of strategy that reduces taxes, but especially if they reduce tax for the rich. He's kind of good if it reduces taxes across the board. He's just not very interested in the product if it reduces tax for the wealthy, which this product is really geared towards a certain segment of the population. Again, you got to be an accredited investor. You're going to have to put away a considerable amount of money. If you're just doing this to put away 100 grand or 50 grand in a year, it's not going to work. This is a policy where you want to put away $1 million, $5 million, $10 million bucks and take that money off an account or out of an account that's a taxable account into a tax-free account. So what does Wyden say? He says, and he's a senator from Oregon. He's, I think, the chair of the Senate Finance Committee. And he says, listen, this is a $40 billion, and this is from his committee on finance. This is what he's released. And he basically is like, this is a play by millionaire and billionaires to get around tax. He says this is not marketed to the public. This is a tax shelter made up of at least $40 billion. It's only promoted to the rich, millionaires and billionaires. It's almost impossible for the IRS to enforce because there's no disclosure. He's also worried that some of the stuff is happening offshore, even though there's an FBAR that is required to be filed. There is very, very little support for the IRS in terms of tracking down these investments. And he says legislation is needed to oversight and potentially even curb or control these PPLIs because it's only being used for the top 1%, and that's not fair. What are you going to do, right? Like, listen, there's a lot of stuff in the tax code that only certain taxpayers can use. Like, I can't take advantage of oil and gas tax credits. I can't take advantage of energy tax credits or synthetic fuel tax credit. If you're not in real estate, you can't take advantage of a 1031 credit, all right, like-kind exchange. So there are things in the code that don't apply to every part of the population. So, Wyden's just angry at anything that, rich people get a benefit from. I get it, but if he wants to change this, he can change the accredited investor rules and allow anyone to invest in alternative assets. And that would at least allow these folks to at least have the opportunity to get in these PPLIs. Now, it may not ultimately make a lot of sense if they can't put away a considerable amount of money, but they'd have the option of at least having this product being marketed to them, even if they're not accredited. So that's on the SEC. That's not on me. If you want to change the accredited investor rules, I'm all for that. But just picking out provisions in the code that only apply and help the rich and saying that's not right, but other provisions that help, industry X versus industry Y or industry Z, like that's crazy. It's obviously there's some zero sum, right? There's some stuff that apply to farmers that don't apply to software engineers or tech companies. So like the fact that he's picking on this insurance programs, kind of Wydenish, that's what he likes to do. So that's why I titled this podcast, it's potentially vulnerable. It's potentially on the chopping block. It's potentially Jeopardy. Right now, you can still do it. But obviously the Senate and especially Senator Wyden is looking at it. I'm not sure we can expect legislation momentarily to combat this or curb this. So it's out there. A lot of reputable firms, law firms, accounting firms, advisory firms are still working with this. If you Google it, you'll see many top law firms that explain what it is and talk about it. Obviously, you need to make sure you would fit into this opportunity. As I mentioned, it's not for everyone, but it's out there right now. It's legal. There's obviously greater investment risk because it's alternative assets versus just stocks. And these products are not registered by the SEC, right? So there's greater risk, but you still have to be an accredited investor. So I wanted to kind of share this because about a month and a half ago, Senator Wyden made a really big stink on this. He released a statement to the Senate Finance Committee on private placement life insurance, calling it a tax shelter for the ultra wealth, and it's on his radar. So we'll see what happens. I'm not sure anything will happen because it's going to require legislation to combat it. So maybe the legislation gets to become part of a future tax bill, end of year tax bill. I don't know. I'm not sure it's like a very important area of concern for the government, but it is for Senator Wyden. So wanted to share it because if you are, if you are ultra high net worth, or even someone that could potentially put away $1 million in these policies, are accredited investors, something to look at. I mean, you should definitely talk to your advisors to see what they say on, the risks from an IRS audit standpoint, or the risk. They just kind of list this as a tax shelter listed transaction, and they would basically have to unwind the transaction. But it is an insurance product, so it has to go through obviously insurance regulatory bodies along with the IRS, which would have to impose some type of restriction on its use, as well as state insurance regulators. So there's a lot of work to be done to kind of just cut the throat of this program. But so if you are thinking about ways to shelter income for not really for you, but more from your kids, your grandkids, and potentially even you, because you can borrow against it tax-free, you may want to look up the PPLI, but just be aware that Senator Wyden and the Senate Finance Committee is aware of this and looking at it. I don't work with this. This is not something I market or I sell. I'm totally neutral on this, or agnostic. I'm here just sharing that this PPLI exists. It's been quite popular for the ultra high net worth for some years. Not very well publicized. It's kind of like one of these tax shelters, hidden in the closet that you got to know the code to get in that closet, and then you kind of get educated on it. But it's definitely today riskier to do than it was a year ago because Wyden's on it, and depending on who wins the election, if Biden wins and there's some control at the House and Senate, like Wyden could get his way as the House ahead of the Senate Finance Committee and try to push some of these things forward. So just be on the lookout. And again, that's really the main point of the podcast, is to educate, to pique people's interest, and to uncover interesting tax solutions, whether it's through retirement accounts or insurance or other tax efficient methods. So thank you again for hanging out with me today. If you're listening to the podcast, thank you. Don't forget to leave a review if you don't mind, hopefully a good one, because the more reviews I get, the more this podcast will get boosted and more people will get to listen to it. If you are watching on our really, really incredible YouTube channel, then thank you. And don't forget to subscribe if you haven't already, because I drop 3 podcasts, a video on this, but also I tend to go live either Thursdays or Fridays every week, 1 p.m. Eastern, and drop 2 to 3 videos on various self-directed retirement tax topics. So definitely would want to check it out. That's it for today. Have a really, really great rest of your day. Thanks for hanging out, and I will see everyone again next week.